Winners and losers. Are you paying attention? This market is doing something that I've never seen done before, and I want to talk about it. Gold is at an all-time high, which is okay for gold to be an all-time high if the market was at a true all-time high, which I don't feel the market's at a true all-time high. I think it's a manufactured high, and that manufactured high is prevalent because of share buybacks. I also think it has a lot to do with circular finance, is what they're calling it now. I mean, we were calling it round tripping for the last 2 years, but circular finance, where companies are investing into other companies who are in turn investing back into them. And maybe it's a little bit more complex than that. Like I've shown one of these flow charts to show you where the money goes and where it came from. But I've been paying attention to this for like 2 years now, and sounding the whistles and the alarms, posting on Twitter, going into chat channels and telling people, hey, Nvidia's not, that money's not theirs, it's not real, or whatever. The pent-up demand doesn't make sense. And then you see the winners versus the losers, and I'll explain that part too right now. That's why I say it, because private equity is a part of this market that no one pays attention to. And the minute you say it, it's like a buzzword. It's like, oh, you want to blame private equity for everything. It's like, no, I'm blaming private equity for what it's doing. Like, legitimately. Like, they lost on some investments and they don't want to take the loss. So, like, if you guys don't know, they lost on GameStop. Holy shit. And they don't want to take the loss. So what do? They go and pull all the coverage. Like, imagine if you were in control of the media, you're in control of the market itself and the rating agencies. You're in control of everything. Just imagine if you had full control and you lost on a bet. And you go, damn it, I lost. Well, we don't want to admit defeat. We don't have to pay it because we have collateral. So no one's margin called you to close your position because you have collateral. And your collateral is manufactured. Like, literally manufactured. So I know people are seeing like the whole picture, like the whole market, but they're not seeing the whole picture. They're not seeing the winning trade. The winning trade's right here in front of you. Like, think about it like this, guys. This is not imagination. This is like so true. So when you see companies fail and lose, you see the one company that they bet to win. They're called category killers, right? So I give you this example, Amazon. Amazon is meant to win, okay? And we found this out when we interviewed a guy by the name of Laser Haas. Laser says, hey, Marantz, I came up with this idea to sell toys online, but they took my idea, gave it to Amazon, who was selling books online. They gave my idea to them because they didn't want Toys R Us to win. They wanted Toys R Us to go bankrupt. They already had torn it apart and carved it out. Well, Laser Haas was a partnership with Toys R Us and all private equities at Toys R Us carving out assets. Cool. So now you understand. Amazon's the winner. So as every company has gone bankrupt from then until now, Amazon's winning, right? Amazon's winning the e-commerce front. But then you have the physical retail front. You have Costco. Costco wins. And then you go, okay, well, maybe Costco can't sell everything because it's only so many square feet and they have, so many departments and categories and SKUs, and they only carry 4,400 SKUs. So you go, okay, well, who's going to sell the other products that we're winning on? Well, look at Dick's Sporting Goods. Dick's Sporting Goods is the winner. Dick's consolidates all the sporting goods categories. All the categories, that category is killed. And to give you proof of it, look at Foot Locker. Foot Locker just had to merge and sell out 2 Dick's. And they actually set that up. Private equity did, because they sent in their guys to the board of directors of Foot Locker and carved it up for them on a T. CVS. CVS wins the pharmacy award. So CVS is winning on all fronts of pharmacy. I know they just filed bankruptcy for one of their holding companies, but Rite Aid is gone. Rite Aid got broken apart and closed permanently because of CVS, because they're the winners. And Rite Aid had infiltration, right? They had Teffer, and her name was Teffer. I can't remember her first name right now. Cindy Teffer, something like that. But she came from GameStop. And it's wild, huh? Because everybody comes from GameStop, and it's always connecting to GameStop. And people don't understand what GameStop was. GameStop was a company that's supposed to go bankrupt, and that category is supposed to get filled up by the winners. And there's no demand for physical retail, so GameStop invented a demand for collectibles, right, with their partnerships with PSA graded cards and to sell Pokemon cards, and aside from just selling video games and consoles, which everyone does apparently, Walmart, and Amazon, and Best Buy. So when you think about like who are the winners and who are the losers, now pay attention to what I'm telling you right now. Right now, the winners are anybody with an AI name, identity. We do artificial intelligence. We do AI. So you get crazy value. Everybody backs you. But they have to pump you because, as you know now, mass media is catching on to the circular finance innuendo. Like, so we said this 2 years ago. We were like, oh yeah, it's what we call, and then somebody made fun of me on this one because they were like, what do you mean? You don't even know what round tripping is. I go, they're round tripping. And I got that term and heard it based off of what Enron was doing. Because when you actually do mark-to-market accounting, which a lot of companies are doing right now to fluff the books, to make the investors feel like, oh my God, there's so much demand and there's so much money coming in. And that's the hardest part. The hardest part is that nothing is concrete, nothing's tangible. So like a company like Palantir does they do mark-to-market accounting, and they don't have enough customers each year to show you like, hey, this is how big we're going to be. So they try to like pile it all in. They'll give you a headline. They'll be like, the Army just signed a $10 billion deal with Palantir. And they're like, for the next 5 years. So you're like, oh, or the next 10 years. You're like, oh, $1 billion a year? Like, what's that on revenue? That's not like earth shattering. It's a 25% increase. But what had happened? You heard 10 billion, and then you go get a market cap of 450 billion. And they're trading at 500 PE ratio. Like, it's a godly amount. It doesn't make sense. So you're like, okay, what's the next one? So when you go out there and you see what happened with NVIDIA. NVIDIA is the number one company in the world, guys. And they're mark-to-market accounting. They're counting the demand, the so-called demand for their chips. They're counting it total revenue up front. There's no hanging chad here. There's no, hey, we're only going to put 25% of this revenue here until we get paid. No, they claim it all as revenue. And it's scary because if you're claiming it all as revenue, it's like, how long is this going to keep up? Because there's going to be a quarter where you report no income. Or maybe the demand's not as high as you say it is, because as you can find out now, this is why we say circular finance, because every investment they're making is making an investment back into them indirectly. It could be directly or indirectly. It wouldn't matter. The point is, they're pumping their own numbers. If you deleted share buybacks and circular finance from this market, where would you be? You would be in the gutter. But more than the gutter, private equity, okay? Private equity wouldn't have a second part. Private equity wouldn't have their leverage and or their margin requirement for what they're short on right now, what they will not unwind and they will not close. That is GameStop. I know it's hard for people to understand, but this is why they shut off the buy button. The whole market shut down, and as they were scrambling to find something to pump, yeah, they pumped AMC to be adjacent to it, and the problem with that was it was the counter. Well, they took their money and ran. Everybody took their money and ran, but you know what? We know what rose from the ashes? Carvana, NVIDIA, company. You started seeing market caps and explanations for value that you could never explain. You can't explain it in NVIDIA's value. You can tell me, well, it trades at a 30p ratio. Yeah, on mark-to-market accounting, they're counting the whole contract up front. We're talking 20-year contracts, 5-year contracts, 0 payments done. I'm telling you, I know exactly how this happens because I read the filings. And when I read the filings for Supermicro Computers and you find out that all of their customers are their own brothers' companies, like, okay, now you have a related parties issue. But everything's circular finance, right? So there's a company out here, private equity gives it $10 billion. Private equity has all this money they need to deploy. Why? Because SPACs aren't on the table right now. There's no M&A. There's nothing going on. So they go, hey, we got to pump a company. They put $10 billion from their fund to go pump something, and they pumped CoreWeave. Oh yeah, CoreWeave took a loan via their assets, which are chips from NVIDIA, and pumped out $10 billion worth of equity via private equity, and they went public and launched an IPO. So then they launch, and you go, wait a minute, how does CoreWeave make money? Oh, they have 2 customers. Microsoft and NVIDIA makes up 70% of their customer base. So you go, okay, So they're making 70% off of these two customers. Well, those customers are putting money back into them. So everything is pumping itself, like each other. There's no real GDP growth here. The only growth are from the coffers of the Mag 7 companies, which, well, really the Mag 5 companies. So the coffers of Microsoft, of Meta, of Amazon, of Google, those guys are keeping the market and the economy alive, all because they're doing like the space race. They're doing this AI race, and they don't want to fall behind, so they're spending money. But that money that's being spent is being pumped right back into them. It's circular. So when you looked at Oracle comes out, and Oracle says, hey, we've got an investment from OpenAI. Okay. Well, where does OpenAI get their investment from? From NVIDIA. Okay, what is Oracle going to invest in? NVIDIA. What the hell? They just paid themselves. So Oracle's demand for data centers is not nearly as high as they claimed. They were down from quarter to quarter. They were down from $12 billion to $5 billion. They lost $7 billion in demand for data centers. Now, it was just announced they lost $100 million. Right? $100 million last month. Okay. I just told you $7 billion in a quarter, and nobody batted an eye. They all say, oh no, we got an investment coming from somewhere, from OpenAI. Okay. So $300 billion investment, and OpenAI is giving that money to who? To everybody that's giving them money. Like, it's not funny, guys. This is real. It's really happening. And the fact that everyone's oblivious to these companies investing back into themselves, they don't understand why they're doing it. But negligence is not the answer. You just can't play dumb. That's my point. So I think it has everything to do with private equity. I think it has everything to do with leverage. Private equity has these funds that have money invested into this market, and they can't unwind their positions because they would be at a loss, a massive loss. So they're holding margin. And the margin they're holding are the blue chips. And these blue chips are going to unfold because eventually the media and some investigative reporting is all it takes. Honestly, all it takes is some kid with with a laptop, an iPhone, and an iPad, and he'll be able to unwind all this. He'll be able to understand just how bad this market is. I did it in like a day or two, just by reading SEC filings. You guys can do the same, but nobody in media knows the truth. And that's unfortunate, but it's going to be GameStop. I'm telling you it's going to be GameStop because I pay attention to a lot of securities, right? And they're the only security that has been stifled. Like, literally halted, and then to the point where no analysts cover it. They refuse to give it coverage in the positive. They do all these great things, and people just badmouth it. I'm talking about, when I say good things, they have a gross, like, they literally have a swing profit of $1 billion. To have your company lose $500 million a year and a cash burn that you can't even quelch, and then you come out and you go, okay, well, here's what I'm going to do now. I'm going to do $1 billion. This guy will not move out of the road. This is crazy, dude. This dude's in the middle of the road blocking traffic. I'm about to cuss him out. But he's on a scooter. I don't know what to tell this guy. Oh my God. Okay, back to you guys. I was just watching. Anyway, I think that the market is, you're going to find the truth out about the market real soon. Maybe sooner than people can admit, but it's going to happen because gold is the only real asset that's going up, and that doesn't have like an infinite amount, right? Like, there's only so much gold, and yet the market's all the way at 4,000 an ounce. And you go, okay, that's a lot of money for gold, right? Well, the stock market's at like an all-time high. Out of the two assets there, securities and gold, which one do you think you can manipulate? I'm going to go with securities. So I think that's what's happening. I think this market is lopsided because private equity doesn't want to admit defeat. And if that were the case, you would see private equity deploying cash and running business, as normal, but they're not. And you would actually see investments coming in for GameStop. Like, someone would be trying to ask questions and or get position and make a rattle, and you don't see it. You see, this is a mid-cap company, a 400 mid-cap company that has gone from the market cap of $4 billion last year to now $11 billion this year. Like, right now, that's at the average for the year. But cash on hand went from $1 billion all the way to now, after this warrant offering, they could potentially raise up to $11 billion. Do you imagine 11xing your money, your cash, and you're more efficient, you're actually making a profit? These are the things that are happening with GameStop, and Wall Street's not mimicking the move itself. So I've seen a lot of smart investors in my day, or I've talked to a lot, and they've been on the channel, and I'll tell you what, guys, apparently no one is intelligent on Wall Street when it comes to GameStop, because they're not covering it, they're not talking about it, and no one's taking profits on it. No one's here saying this is the next thing, and for these reasons. So, and for those reasons, I'm telling you, circular finance, the manipulation of the stock market, is happening right now, and it is GameStop. Can't stop, won't stop GameStop. They don't believe it's GameStop until it is. Peace. Millionaires. I'll see you around.